we've all seen the rise of China venture capital and Chinese entrepreneurship and the funds that have gone in and all the Silicon Valley investors that are there now, and now the move to the R&B funds, and we've seen a lot of M&A action and a lot of IPOs coming from China and within China as well. So as this seems to take off and seems to be unstoppable, where do you see this? Where do you see Silicon Valley fitting in?
The question, I think, is, I mean, if I could distill it down, is China going to challenge Silicon Valley?
Mm-hmm.
And I think.
Yeah, where's it going?
Well, I mean, it's like one of these things where the slope of the line is extremely steep in China, and the slope of the line in the U.S. is low. But the question is, how tall is that line in the U.S. over, the line in China, and therefore when they cross over? I agree with Joe, actually. I think there's a lot of innovation in China, and there's certainly a lot of interesting things, but there's a long way to replicate the Silicon Valley infrastructure. I mean, over my years in venture capital, I've always been asked whether it was Israel developing or Australia or other countries where I would go speak, and people said, how can we get Silicon Valley created here?
What's lacking in China, in your view?
Time. And just maturation. I mean, the capital markets are not yet there. There's a ton of things that have to be done there. The local LP base is just being formed there. I think the management, the breadth of the management experience is not there. The service providers are not there. There's a huge, I'm sorry if I say anything wrong here, but the service providers there, regardless of whether they have US names or Chinese names, when it comes to doing M&A and IPOs, are not the same quality that we're used to dealing here in the Valley. I'm sorry, but that's just true. And that's a thing of experience. That's not one of the people or intelligence or anything like that. It's just, they just don't have the experience. So then there's the technological side. I think modern management techniques, we talked about sort of the patriarchal, Bill was talking about, what I call a patriarchal management style versus the US management style in terms of the Valley is hugely important, and something that's much more sophisticated, and empowering the workers from below and getting people to think creatively and out of the box but still stay within an organization is an incredible thing that just doesn't change overnight. So I have great hopes, but I have no fears, I guess.
I think I think probably all of us see when we're working with entrepreneurs there, we see the roots of that starting to reemerge, and I think that the culture is very creative and innovative as well as entrepreneurial. And I think that's going to pick up speed as the collective intelligence enabled by social networking and the internet causes more interaction, or as one guy recently said, sex having ideas, but that's what social networking enables, right? So I think it's a bright future in terms of innovation.
And do you see it shifting from the returnees from here at the West, Silicon Valley, educated and experienced returnees, to more of the homegrown domestic entrepreneurs? David?
Yeah, I would say so. I think in terms of quantity, there's no question that, I think the first generation of sea turtles developed lots of good managers. I think the landscape is absolutely changing. I think from, the lens of Silicon Valley, we tend to always focus on deals where maybe one person in the management speaks English, but, the realities are that most deals in China, there is nobody speaking in English, and hence the local, even the local stock market is supporting all that entrepreneurial activity. But also it also depends on which sector you look at. If you're looking at manufacturing, of course, the local shine. But if you're really looking at true innovation, there's always a few people involved who have not necessarily educated, but they've experienced looking at China from the outside to be able to find where the opportunities lie. But it's changing. The landscape is changing, and it's changing fast, and it will continue to change. But having said that, it's a big industry. You could probably focus on one or two sectors, and I think it could be continued to have funds in the U.S. U.S. that might, focus on just backing returnees.
Do you need to have an RMB fund today to be in the game in China?
The RMB fund I think, is a very temporal thing.
Really?
So the reason why I say that is I think within 5 to 10 years, RMB and dollar will probably float, and on a relatively same way that the Japanese yen floated after World War II. Now, once that happens, the whole notion of an RMB fund is kind of defunct because you can exchange your dollars to RMB anytime. So I think over the next 2 to 5 years, there will be a place for an RMB fund, only because it's not very easy to convert dollars to RMB, and it will have its role and its place. But if you look at long term, it's probably it's a tactical issue that investors face over the next 2 to 5 years. So that's kind of the way I see it.
I don't think people realize too, I mean, I agree with David, but the whole reason for an R&B fund is so that you can invest in a local company and go on public on a local exchange, which you can't do with a WOFI structure or an offshore entity. You can convert an offshore entity into a local company, but you can't do the other way around too. So there's, I agree, this is temporal. It's at 3 years, it's at 5 years, I don't know. I always based it on the Olympics in the country and how many years it took before they, no, seriously, 1964 to 1971, 2008, and then pick your date. So, I mean, oh, that rhymes.
So is going public on NASDAQ or the New York Stock Exchange still the gold standard, or what about going locally?
It's like Gucci.
Uh-huh.
I mean, Asian companies always, or Asian consumers love brand names.
Okay.
We had our first IPO out of our R&B fund last December. It started trading on Christmas Day, and it's trading at 97 times PE still. And if that holds up, it'll return 1.5 times the whole fund. So I think there's a certain allure to try. Now I don't know how long it's going to last. I hope it lasts till this Christmas, but if it does, it's a nice present.
Oh, that's not bad.
We're also seeing quite a number of offshore companies that were set up with the idea of going public, in whether it's NASDAQ or the New York Stock Exchange, thinking about coming back onshore or thinking about doing conversions and looking more towards Hong Kong. Right now the multiples are very attractive, and so you can't ignore those economic realities. Sometimes also management they're just frankly more comfortable with being on a domestic exchange or going to Hong Kong. So we have a number of companies that are looking more at the domestic capital markets.
Looking at
Rebecca, I
yeah,
have a couple things.
sure.
First of all, as far as China and the United States are concerned, they're both about the same land mass, and China has about 1/2 of the arable land that the United States has, and 4 times the population. And when you think about that, it really drives a lot of behavior. Second thing is that if you look at what's happening in the entire developed and versus undeveloped world, right today there are about 1 billion people in the developed world in the middle class, and there are about 500 million people in the undeveloped world in the middle class. By no later than 2025, there'll be 3 billion people in the middle class in the undeveloped world and 1.5 billion people in the developed world. So the undeveloped world goes from 50% to 2x. And think about the profound implications of that. It's amazing, because it means it's going to shift to a consumer economy, and there are going to be a lot of drivers that are going to, and it's also going to change a lot of other behavioral patterns, healthcare and other things.
Sure.
So those are just interesting things. As far as the capital markets are concerned, we've had 26 companies in China. We've had four companies that have gone public, all on either the NASDAQ or the New York Stock Exchange. And we're in the process now of having 2 others, and one of them is going to go, it's going to be a WOFI that's going to transcend to a local exchange, and the other one's going to go on Hong Kong.
Can you name those?
Sure. The one that's converting is a microfinance company called UPG in Hangzhou. This fantastic company, And the one that's going to go in Hong Kong, most likely, is CITIC Pharmaceutical.
That's the one you're on the board of, right?
I'm on the board of that, yes. And we've gone through, and that was a great example of how, you know, leadership can really make a difference. On that score, by the way, we've had 3 cases where we've changed management, and you talk about a culturally impossible thing to do. And
Wow.
they're working out, all of them are working out well.
That's great.
Just one comment. The allure is going to be gone in 10 years. I mean, come on, if you're China, why would you want some of your best companies to go public in a foreign exchange? So I think the government's view is long-term, you know, they would like to attract, but the markets, the domestic market, as the PE is really high right now, but you know, there's many shortcomings as well, whether it's flow, lockups, it's very retail focused, as opposed to institutional based. And so the entrepreneur is always going to have to figure out what's the best answer. But you know, if you look 10, 20 years out, I mean, I highly doubt a Chinese company is going to say, gosh, I really would like to go out on NASDAQ and New York Stock Exchange. Now, it could happen if China's policies fail, but you know, at the current trajectory, I just think that, now, I think NASDAQ, New York Exchange will still be great markets. I don't get me wrong. I just think that the lure the shine is going to disappear.